Hey friends, Lucian here with the Bullish Bears team. Wanted to make this video on how to trade Bitcoin at support and resistance levels. So before I begin, I just want to be very clear. We are not on the Bullish Bears team doing anything with Bitcoin. We are not Bitcoin pumpers. We don't have any positions, or at least as I'm making this video, I can speak for myself, which is Lucian, and Dan. I don't believe, or we don't have any Bitcoin. I don't think if anybody else on the team does, but just very point blank, we aren't pumping Bitcoin. As far as I know, if any of it, I'm not sure if any of the other people on the team have Bitcoin, but just right off the bat, we ain't pumping Bitcoin, right? Also, want to give another disclaimer. We're not haters of Bitcoin. We have nothing against it. Also, another disclaimer. We have no clue what Bitcoin is going to do in the future, right? So we're not speculators. We're not going to say what it is or isn't going to do. What I'm going to do in this video is strictly show you charts, right? Now, I'm probably going to trigger good and bad some people in this video, because for those who are Bitcoin lovers and they're trading it on emotions and they believe in it long term, and they tell you charts don't matter or Bitcoin doesn't go with the charts, it's a bunch of baloney. Now, when I say that, you know, Bitcoin will move extra volatile than a typical stock or stock chart. So again, it could be extremely overextended and go to the moon at the same time. So it can go easily pump up and easily dump, right? So when I say that is, you know, for those who are, get extra emotional and say, oh, the charts don't matter in Bitcoin, it's a bunch of baloney, guys. People, it's very simple. The nature of the stock market with all stocks, any sector on the planet, you buy at support levels and sell at resistance levels. So you could probably hear me being a little bit extra passionate in this video, because I am. It triggers us, like gets me super frustrated, because we do our best to always try to help our community members to trade safely. You know, we teach them to not trade off of emotion and buy on hype and all of that stuff. Again, we are not haters of Bitcoin or any sector. We teach, again, those who follow us how to get good entries and where you would potentially enter, a trade such as Bitcoin or any trades, and show you where to take profits. So again, if you're one of those people that's listening right now and you love Bitcoin and you think it's going to go to the moon forever, good for you. Hopefully you make money long term. But for those that are actively seeking and say, this is a sector I want to invest in, I want to get in safely, because you see, look back here, Bitcoin was at $20,000 and it went down to $3,000, right? There are a lot of people that bought Bitcoin up near $20,000. This is just the Bitcoin futures right now. There's so many different stocks and all that stuff you can buy. I'm just showing you strictly a chart of futures. What I show you on this, you can apply to any other type of Bitcoin stock or any stock in general. The concept is still the same. Buy at support, sell at resistance. Patterns and support levels matter. So if you are actively looking to see how to trade this sector or in general, pay very close attention to what I'm about to teach you. Again, you're probably not going to learn it all in one video. If you don't know how to trade, if you don't know candlesticks and patterns and support and resistance levels, this is going to be a very quick crash course on it. Just hopefully catch you to show you this. Especially, we highly encourage you, before you buy any stocks, to know support, resistance, candlesticks, all of that stuff. Again, on our website at bullishbears.com, the link will be below. We have free courses to help you get started. So this is for those that, again, this sector is extremely volatile and goes very quick. So depending on when you're watching this video, this may very well save your brokerage account, or may very well, get you a better entry. I want to get you to pause, right? I want to get you to pause and not trade off of emotion. So if you think you want to get into Bitcoin, I want to get you to think about what to look for, where you would enter and where you would possibly exit, because this could mean the difference of you, making some really great money on a great trade, or losing your life savings buying off of emotions. And we want to do everything we can to prevent that. So there's probably half a crowd left here right now. Whoever's listening to me right now, those that love and buy off of emotions are probably going to throw hate and shade on me and post negative comments on this video. And for those that actually really want to invest in this sector and do it right, those of you will be extremely happy with what I'm about to teach you. This right here is again, futures chart of Bitcoin, right? Several different symbols you can pull up. Again, as you can see, Bitcoin used to have a previous high, all-time high of $20,650. And then as you can see, this thing bear flag down, bear flag down, bear flag down, bear flag down. All these little lines and levels and everything, all these these green and red areas that you see here are candlesticks. That's the battle of the bulls and the bears. Green candlesticks are bullish. That means the bulls are in control, pushing price up. Red candlesticks mean they're bearish. Bears are trying to push it down. When you have that tug of war between the bulls and the bears, it leaves candlesticks. Those candlesticks form extremely important support and resistance levels. Again, if you're hearing Bitcoin, ask yourself, if you're in this sector, ask yourself if you're brand new. This is very important to think about. When you hear all of this news about Bitcoin, all of this hype, all the chat people, all the pumpers, all of this stuff, how many of them do you ever how many of them show you charts? How many of them show you where to buy and where to sell? How many of them show you support and resistance levels and candlesticks and reversals and patterns? I would bet money hardly any of them are. Either one, they don't know it, or two, they know that it's going to pump and dump, and they're pumping and dumping the sector. Again, I'm not saying Bitcoin won't be great long term. What I'm saying is charts matter in the process, and everything that you see here is incredibly important. It tells a very important story. Candlesticks form very important support and resistance levels, and they give you, again, very important clues on when to enter and when to exit a trade potentially. You can see these lines here are moving average lines. Some people love moving average lines, some people don't. We're not saying they're the foolproof end-all be-all over anything. I just showed on this chart here some very popular moving average lines. The black line is the 200 simple moving average. The purple/pink line is the 50 simple moving average. The blue is the 9 EMA or exponential moving average, and the red line is the 20 EMA or exponential moving average. Again, this is going to be a crash course, not a full in-depth course on technical analysis. The smaller a candlestick is, the better your risk management. The bigger the candlesticks that you see, the bigger your risk management, right? Once candlesticks get bigger, it's a lot more risky. Again, that's a lot more volume, a lot more buyers and sellers, and the risk management is a lot more difficult. And it's, again, that's where people start to lose a lot of their money. When you're buying at support levels, you want to ideally buy near moving average lines. You want to see crossovers. Ideally, you'd like to see the 9 EMA over the 20 EMA, a small candlestick, a hammer, or a doji candle, which I'll show you, near a moving average line. And then as the stock breaks out, consider taking your profits, right? I can't tell you when to take your profits because, again, everybody's different. We'd like to tell you, again, you can't go broke taking profit. I'm going to show you a chart on more of the short-term trading. This is more of a daily chart showing you where you could make profits in the matter of, let's say, days or a couple weeks. There were other people, which I'll show you on the other, I'll show you different time frames that go longer term. There isn't necessarily a right or a wrong way to do it. I just want to show you the differences. When you look at a daily chart like this, it speeds up the process. It's a quicker move. If you're a long-term trader, you'll see a chart when I do it differently. It's going to look completely different than this, but candlesticks matter. Support and resistance matters, right? So as you can see over here to the far left of this chart, that red line's over the blue line. That means the 20 EMA is over the blue line, which is the 9 EMA. That is bearish, right? Red, that 20 is over the 9, bearish. You can see a bear flag, bear flag, bear flag. Again, if you're like, what the heck is he talking about? We have courses on our website that'll teach you these patterns, right? So then you can see over here, again, I'm not going to go into all these patterns and support and resistance levels, but just kind of show you an example of this right here. You can draw a line. This is a peak resistance level. This is like the all-time highs. When you get down over here, let's say at, this 31.20, this is all-time lows. So all-time support, all-time resistance. And then in between, you can see these peaks and valleys. When you connect these valleys and you connect the peaks, I didn't do all of them. You can do another one right here. That's actually a very important one I wanted to show you right here. You can see these two peaks formed a double top pattern. When this right peak can't break the left peak, it's a bearish pattern and it falls down, and then it forms other patterns. You can see here, a bottom here, a bottom here. That's a double bottom. So a double bottom is more of a bullish pattern. You can see it gets pushed up. A double top is a bearish pattern pushed down. Again, you see, you connect these peaks, these valleys, and these peaks, and these valleys and peaks are very important in the future. That's why we extend these lines. So when people are like, this is the stock market 101, not just Bitcoin. Everything's about support and resistance. What happens in the past affects the future. When a candlestick can't break very important resistance levels, that's where traders take profit. That's where volatility happens. That's where stocks start to reverse and the tug of war starts to happen. If a stock can break resistance, you want to see it then become, once it breaks resistance, it then becomes support. You want to see it hold and then continue upwards. Now look at this line right here, very important level. Well, no coincidence. This is so important to pay attention to. Look at what's happening right now. The hype is like crazy right now. Everybody's talking about Bitcoin, crazy volatility. So you can ask me right now, well, what's Bitcoin going to do? I'm going to tell you flat out, I don't know. What I do know is it's really crazy, majorly big candlesticks right now, and it's the tug of war with the bulls and the bears right at very important previous resistance levels, right? I'm going to show you other areas where it's not so crazy and where you could be aware of, when you could be aware of possible pumps happening. Now, if you think that Bitcoin or the people are not out there pumping this, you don't kid yourself. This is a major sector, Bitcoin as well as pot stocks, extremely big pumping sectors, again, off of hype. Not saying pot stocks and Bitcoin won't be good long term. I'm just telling you there are pumpers out there and you can be aware of them. If somebody's telling you to buy something and they're heavily promoting it, and you ask them to show you a chart of where to buy and the sell, and they won't show you, that's a problem. I'm just telling you flat out, it's a problem because, again, Bitcoin runs with every other sector. It's charts, right? Charts and patterns, where you would buy and where you would sell. Now, there's people, again, we have a whole big Facebook community. Anytime we do our best to hardly ever talk about Bitcoin, because to be honest with you, anytime the word comes up, it just triggers people. Some people love it, some people hate it, and then it's just kind of an annoyance, right? So you try to teach people something. Like I said in this video, just watch. When we post this video, you'll see positive comments, and then you'll see negative comments, right? But when I'm showing you here, this is where I would say to those who are haters or negative comments, I would say, show me where I'm wrong in what I'm teaching you on this chart. That's where I'm going to go a little bit more in depth here. I'm going to show you more of levels of buy to sell. If you can't show where I'm wrong, then you're trading off of emotions and you're not helping people. And this is where, for those that really want to learn, this right here, what I'm going to show you, could literally save your brokerage account, make you a lot of money, and also save you a lot of money, and also get you into the world of trading stocks just in general, because what I'm about to show you applies to really everything when you're trading the stock market. So again, zoom out, candlesticks, patterns, connect these tops, connect these bases, and then look forward to the future and see what's happening at these previous levels. So what you can see is, look at all these moving average. This 9, ideally you want to see this 9, that blue line, above all the other moving average lines. That's a bullish sign. So when you see the 9 crossing over, stuff into this area, you'd like to see the 9 over the 20, over the 50, over the 200. Well, you can see it crossed over, but then it went bearish again, right? Kind of goes up again, but look, see the moving average lines? They're still kind of crossed and they're falling. Now you see huge separation over here. That's the 50 over the, or actually, yeah, the 50 over the 20 over the 9. Super bearish, right? Over here, super bearish. Now, here's where it gets interesting. You have this base, and then look at all the small candlesticks. You see these small candlesticks? Small candlesticks are a good sign. Doesn't mean it's going to go up. But again, that's where the risk, it becomes less. Not saying that does not mean to buy just because candlesticks are low. Because you never know. Like you can see right over here, oh, these candlesticks, oh, I should have bought them way back here. Well, you also didn't know back here. Hold on, my chart is getting a little bit messy. Back here, when it's doing this, it's trading sideways below the moving average lines. It is above a support level, but you have no clue that it's not going to just fall below that. So if you did get in these levels, be aware that if it starts to fall down to these levels right down here, all-time lows, that's a very, very, very dangerous level. So again, remember I said when a stock can't break resistance, then that's where it tends to reverse. So if it breaks resistance, it then becomes support. If a stock falls below support levels and it bounces back up, then it's resistance. So if it fell below this 3120 and it bounced back up, if it can't get back above those levels, that's a big problem, right? So support and resistance, very important. Again, crash course, you want to see those moving average lines, the 9 over the 20, over the 50, over the 200, and you want to see price start to ride those levels. So why am I saying that to you? Well, look, moving average lines start to cross, and now you can see that 9 line is over these other moving average lines, and they're close. Ideally, you want to see them start to separate, and then, start to slowly separate, and then this is ideally what you want to see, right? When you see the 9 over the 20 over the 50, that becomes extremely bullish, right? Just because it's bullish does not mean you buy it. You still need to buy at support levels when a stock is bullish. And just because moving average lines separate doesn't mean that's the time to buy. Because remember, you got to look at previous peaks and valleys and these resistance levels. So you can see these are resistance levels that kind of, these two are kind of right over in this level right here. It doesn't go back to over here, but you can see these levels over here go to the future. Right? So when I zoom in over here, you start to see, it's trading sideways. Some people will risk off of these. Not saying not to. It's just a little bit more risky. You want to see many times. This is the strategy, right? There's a couple different ways to do it. You can get in on a stock near moving average lines before the break of resistance, or you can wait for a stock to break out, retest the previous resistance levels, and then decide to get your entry. That's the safest. Doesn't mean you don't do it beforehand, but just be aware of the risks. So you can see right here, there's kind of like a double bottom-ish, or kind of inverse head and shoulders, kind of a left shoulder, kind of a head, but actually the head should be down here a little bit. See, this is where like stocks like this, it's hard to kind of get like the patterns aren't always going to be perfect, right? But you can see this level over here of resistance goes over here to the future. So now when you start to look over here, if you decided to get in before the break of this area, just realize once it gets to these levels over in here, if it starts to fail and fall down, you got to be very careful because it's hitting resistance. So getting in earlier is risky. That's where you got to determine your stop levels, where they're, if you're going to get in below a close like down here or down here, you have to determine your risk. That's why I try to tell, or your stop loss levels, and when you get out. This is where you always want to have an entry and an exit. And that's why I say don't just buy something and think it's going to the moon. Because just because it looks like here, like it might break resistance, this could easily, you might buy it at 3,800. And what happens if it falls below 3,000 and then it goes down to $1,000, which you could easily do, right? There's no guarantees. So that's where you want to have your exit strategies, set up beforehand. But as you can see, this line over here, now you can see the 9 and the 20 and price is creeping above. And then look right here, you can see this little, like this hammer, a hammer off the 9 EMA. Actually, right over here, my fault. Let's do this one first. It's hard to zoom in on these things a little bit. Right back over here. See this small little kind of hammer or spinning top candle? Let me make sure that's the right one. Yep. As you can see, it's breaking above that red line, retests, and it holds. Right here. If you got in at the break above this candle right here, or maybe this one, this is an inverted hammer, so you had 1-2 shots. Then it took off. After these small candles right here, if you miss your entry, after that, these big candles, this is where it becomes extremely risky. But I want to be, this is where I want to let you know, guys, this is so important because, you know, the people that say charts don't matter, they're the ones getting in at the right entries and pumping up the stocks, many of them. They're getting back in at these levels and pumping it up, right? They're getting in right over in here. And then you know who's buying out here? The absolute new trader that has no clue what they're doing, and they're buying off of the news and the hype and someone that tells them to buy. This black line right here is the 200 simple moving average. When somebody says, well, charts don't matter, well, look at it. It hit the 200 simple moving average, and now you have this, all this indecision. So if charts don't matter, why does this happen? Because it's still hitting resistance. It's hitting resistance, and once a stock moves far away from these moving average lines, it's like a rubber band. It naturally wants to move back. So when a stock goes way out here, it wants to come way back in. When a stock falls way below the moving average lines, it naturally wants to grow back to them, right? When you see these huge candles, it becomes extremely risky. So you can say, well, how about this little candle out here? Shouldn't I buy this little one? Well, not necessarily, because look at how far away from it is from the moving average lines. You want to buy near support, these moving average lines. Sell at resistance levels. Now, I'm just showing you to consider taking profits here, because if you bought down here at 4160 and you went up to 5300, that's over $1,000. Why not take your profits? You know, but a lot of people say, well, just buy and hold long term. Well, take your profits up here and then look for reentries and go back in again. You don't have to hold the same shares forever, but people just have this psychology. Well, and you can, technically, you could buy down here and hold in the future if you want, but you know, you also don't know. We're looking at Bitcoin today, and you can say, well, if I bought it 4,000, it's 12,000 today. Well, hindsight's 2020, right? You don't know it's going to be 12,000 until it's 12,000. But, you know, if you take your profits along the way, you can always re-enter, get new positions, and take your profits again. So again, you can see right up here, was that the right candle? Let's see. Right over here. Now you can see kind of that resistance level comes back. And then there was also a previous resistance level over, kind of back over in this area right here. That line goes to the future. Well, now where does that go to? Let's go over to this one. So if you bought down here, sold up here, look for reentries. It gets a little bit messier down here. You could potentially risk here, but you can see that 200 simple moving average is still above these lines. It gets a little riskier. You can see price gets above the 200, comes back down, bounces off the 20. So it's a little bit wonky of a roller coaster. Possible head and shoulders. You got to this is where you can start to draw your trend lines. You know, connect this base level right over here. You know, kind of right here to, let's say, right here. You know, kind of right in this level right here. So here's it came back down, hit support. It's right near that 20 EMA level. Kind of bounces up. Once it starts to break, you know, this previous level right over here, that 20 or that 59.31 area, you can see that little hammer. So you have a couple here. You can see they're a little bit further away from down this one over here. So you can say, well, that it's the reason why it's breaking previous resistance levels and more people are watching. Look at the volume kind of coming in. So smaller candles back here. So technically you could have gotten in, and if you want, there's a ride the 9 strategy. So if you got in back here, you can do the ride the 9 strategy and say, hey, I'll get out when I close below the 9 EMA. So you could have gotten in here, closed out over here, right? or you could look on a different time, chart time frame if you wanted to. This is a very risky candle right here. This would shake a lot of people out. But now you can see as it's going back up, hitting resistance, you have that hammer again. This one right here, that inverted one, is kind of a shooting starish or inverted hammer. It's a little further away at resistance. You have a couple candles, and then look what it did. The volume came in, took off. So now look at this. These candles are super risky because now you have a lot of people looking over here. And you can see, right, if charts don't matter, what's happening up here? Remember, it's the buyers and the sellers. So the whole point being with that is, if this is where new traders are selling, this is where the smart people or new traders are buying. The people that are pumping it up or in the they're taking profits because they're taking their profits near resistance levels, looking for reentries, right? So you can say this is not traded, or that all these people are buying and selling and holding long term. Not necessarily true, because they may have taken their profits up here, look for an entry right here again, sold it up a few days later here. You guys seeing this? Support levels near the 9 EMA, the 9s over the 20 over the moving average lines. Looking back down again right in here, another level, take their profits. Well, look at this. This is a few days. Maybe also right in here, it's a little riskier because it's a sloppier pattern, but someone may have risked off of that green hammer right up there, took their profits, comes back down. Now you can see this is a head, a left shoulder, and a right shoulder. Head and shoulders are typically bearish patterns, so you got to be careful. I could also readjust my trend line now, and I wanted to kind of go right up in this level here now, right here. So it's kind of holding support, but right here you had this 1, 2 candles here. If you didn't get in here, now when you're buying out here, this is where you got to consider taking your profits. These spinning top candles away from moving average lines. You can see it came back down, and this green candle is farther away from that 9, and it's all risky. And then leads you to right now, as I'm making this video, this. So huge resistance level that goes all the way back to right over here, this double top pattern. All right. So when you come all the way over here, very risky, huge candlesticks. And now I would say, if somebody's saying buy, this is where all the pumpers are right now. This is where everybody's talking about it. It's all over the news, articles everywhere. But I ask you, where do people tell you when to buy and when to sell? Show me the videos of people showing you this stuff. Small candles near moving average lines. Take your profits near resistance levels. Look for reentries at smaller candles near support. Take your profits near resistance. Look at head and shoulders patterns, right? This is kind of an ascending triangle, or this is actually kind of a rising wedge pattern right here if you connect kind of in here, right? All of these candlesticks are important patterns, and then you can see they become very big and risky way out here. So all that to be said, I have no clue again what Bitcoin's going to do long term. This right now is a critical important level. This is kind of a big piercing level pattern. It's a mess right now. This could easily launch, because it is bouncing off that 9 EMA. This could easily launch and go back up to all-time highs. It could also easily dump, right? So you have to be careful because of this volatility and everybody that's looking at it. Now, what I just showed you was a daily chart. Now let's look at a monthly chart. You can see monthly, these candles are getting really huge. Now you can say, wow, those are big candles. I should get in on that right now, because look at it, it's going all the way up here. We don't know that. You can see this is a very large candle. It is closing above resistance, right? So you can say, well, it is closing above this monthly resistance way back over here, right? But also look, that 20 EMA is way over this 9 EMA. Now this 9 EMA is getting closer to that 20. If it starts to cross, right, if you're looking at a monthly chart, if that starts to cross and then kind of pushes back up, this could easily, again, patterns matter. This may be forming a cup pattern. And sometimes, this could form a cup and handle. A cup could be like a big circular base. And then you want to see it break above all-time highs, which would be the top of the cup. So as it starts to broach, if it broaches up this area, you ideally want to see, 20,650's all-time highs. You'd ideally like to see it get above that and hold. Just remember, like if you're on a monthly chart, these are very big candles. You would have looked potentially down here. These two small candles are spinning top candles with equal bottoms. Those are basically spinning or tweezer bottom patterns. Two equal bottoms. You could have looked at a possible at an entry right down here if you wanted as it broke these bottoms, using a candle close below that as your stop if you were doing on the monthly. But just remember, like, you could give a lot of profits back on your way. But look, this is better risk. Smaller candles, tweezer tops, reversal, got in above these two candles. And then you could decide, look at, when do you want to take your profits? You're up 4,000 to 12,000. You're up $8,000. Don't just assume it's going from 12,000 to 20,000 again. It could go to 100,000. I don't know. All I know is candlesticks, patterns, reversals, take your profits along the way, right? And lastly, let's just kind of look at a weekly chart. You can see right down here, kind of everything. You notice how when I change the time frames, everything still stays the same. It just looks a little different depending. Again, remember, I was showing you shorter, quicker time frames getting better entries. I just showed you monthly, which is longer time frames. Weekly is kind of the in-between between the daily and the monthly. So you can see right here, this kind of like the moving average lines are starting to get up closer. It's kind of forming a flag. Now, again, you can see in the weekly charts, these candles are a lot bigger. But you may have looked somewhere in here. Again, that's where you'd have to zoom in on the daily to get a better entry. These candlesticks are a little bit risky, but as kind of like as it starts to get above right here, that 58.65, you may have considered getting in an entry in a weekly here. But then look at this. These are crazy, doji candles that become a mess. You could still be in if you got in over here. You could decide to ride the 9 on the weekly if you wanted, right? That's up to you when you take your profits. This is just warning you, hey, you really might want to consider taking your profits. But you can still be in it if you want to hold longer term. So we're not telling people, hey, don't hold long term. I'm just showing you along the way ways that you can make more money. Remember, or take your profits and get back in. Nobody knows what Bitcoin's going to do the next following week. So if you decide right now, if you were back over here at 56.20, it's up at 12,000. You don't know what's going to happen next week, next month, or 6 months from now. This might go up to 20,000 and break above. And yeah, you would have lost on a lot of profits. Or it could easily fall back down. You can see it's creating kind of a high wave candle. This could easily smack back down. Now, if you're up at 12,000, it starts moving down to 8,000. Well, you just gave up 4,000 profits. You might say, hey, I'm going to stay back in. What if it goes down to 6,000 and then back down to 3,000 again? Ask yourself when you're going to take profits. And as you can see, these candlesticks, very big, high wave candlesticks are, it's the tug of war in the bulls and bears. Everybody's watching. These doji candlesticks are warnings. Remember, if I tell you, just take this all in. When stocks move away from these moving average lines, they want to gravitate back. At some point, they will. At some point, Bitcoin will go up, or it may go up. It will come back down. Doesn't mean it's going to crash and never go up again. I don't know what it's going to do, but I know, look at how far it's going away from these moving average lines. At some point, no matter what it does up here, it will come back down. So if you take your profits here now, you might kick yourself because it goes up to 20,000. Well, that's the risk of trading, right? You got to decide when you're going to take your profits. But next week, next month, tomorrow, going into it, this could easily smack down. This could easily, it's telling you, easily come back down to that 9 moving average line on the weekly, But if you look at the daily, it is bouncing. And again, just showing you guys, doesn't mean you can't trade this, doesn't mean you should or shouldn't trade it. I'm just showing you the safest way to trade it when you put it all together. Small candlesticks near moving average lines on whatever time frame that you feel most comfortable trading. I just showed you daily because you get the better entries on the daily, and then you decide, are you going to take your profits on the daily, or are you going to switch to weekly candlesticks? And if you got a good entry, decide out there on the weekly. right? But again, if I just can't stress it enough, buy at support, sell at resistance. Don't listen to hype, rumor, news. Don't listen to stock pumpers. And if somebody's trying to tell you something, challenge them. I really challenge you to challenge them, because this right here, this chart right here, if you just look at it, stare at this chart, see these lines, probably some right over in this area too. This is a little bit sloppy, but this is a really good gauge on what to look for. You can kind of stare at this chart, look at it, and this is going to be pretty right over in here. You can see some resistance probably in this area, is kind of right in this area as well. You know, whole and half dollar amounts, very important levels as well. So I challenge you, ask people that are pumping stocks, ask them, show me a stock chart. Show me where to buy, you know, and where to sell in Bitcoin. Show me a Bitcoin chart, where to buy, where to sell. I guarantee you probably the majority of times they won't ever send you a chart, and they'll give you some silly response back. And if they do send you a chart, see if it adds up to something similar than this, similar to this. Some people use different strategies and different moving average lines and go out further. That's fine. But what you ideally want them to show you is something like this, using their time frame, using their moving average levels, explaining candlesticks, and showing where to buy. Again, I'll leave you with this. Buy near support, smaller candlesticks near support, sell at resistance levels, take your profits. Or if you're going to be in it long term, you know, you could do something like ride the 9 or ride the 13 EMA. If you got a smaller entry right over here, when you got a candlestick close below the 9, you can take your profits, look for entry. You know, many times you start getting faked out. So, you know, you could have got in back right over here, and technically you could have got in, you know, at 59.32, sold again right here at this one, 7,600. But look, you could have sold at 7,600, but you could have had 9,000. So you could have had more money if you took your profits. That's what we're just trying to tell you guys, is that you can stay in longer term, but why give back profits when you can always get back in on a smaller risk candle? All right, so for those of you guys that are haters watching this, I look forward to your comments. You'll just bump this up in the YouTube rankings. For those of you guys that actually really wanted to learn from this, this is something, if you just listen and really pay attention to this could do a lot for you with making money in the stock market, whether it's Bitcoin or any stocks, or also potentially really saving your brokerage account. So hopefully this all helped you. Again, take our courses on our website. We have lots of courses on helping you to learn the stock market. So that's it for now, and we'll touch base and we'll review this video at some point and see what happens with good old Bitcoin. Later, y'all. Enjoy.